All right. Well, why don't we go ahead and get started? So everyone, thank you for joining. I'm Jordan Fry from the Prudent Plastic Surgeon. I'm joined here by Larry Hickernell, who is with DLP Capital, and I got introduced to them when I was at the Best Ever Conference. I guess it was almost a year ago. And I got to see a lot of their presentations and was really kind of blown away by all of their experience and how much they leaned into education. And so Larry and I then got hooked up, and I'm excited to have him here to kind of share his expertise and go over some real life investing examples in real estate, because we're still in a challenging market. And I think one thing that really sticks out, and I'm sure Larry you can speak more to this, is we all saw when interest rates were really low that there was sort of a lot of syndicators coming out of the woodwork and things like that. And it's not everyone that's survived, and DLP has certainly been doing some impressive stuff since then. So Larry can really speak to their strategy and how they've been so successful. So with that being said, I'll pass it off to you, Larry, and certainly everyone feel free, if you have questions throughout, to put them in the chat, or just to chime in, and we'll have a Q&A after as well.
Absolutely. Yeah, thank you, Jordan, and thanks everybody for joining us here today. Super thrilled to be with you all, and I'm really excited to chat. So we'll definitely jump in, and really excited to jump through and kind of introduce DLP and who we're all about. So obviously, if our chief legal counsel here is on the call, we're not giving tax or legal advice, but we're here to give you all the information that you need in order to make an educated decision about investing and potentially investing with us. This is my family, my awesome family, my wife, Jen, my daughter, Sarah, who's in the middle there. She's 11. My youngest, Lily, turns 8 next week. And this was our most recent trip to Disney here. So if anybody's close to Orlando, it's somewhat of a blessing and a curse, because there's always the expectation, oh, we're super close to Disney, we can go anytime. So this was the most recent visit just before school started. So been in private banking, wealth management, credit, financial services, most of my career, and coming from Northeast Pennsylvania, grew up in Scranton. So it's great to be with you all. I've been with Don for about 7 years here at DLP, and have helped build out our investment funds team, which I'm excited to talk to you about. So a lot of folks have kind of asked us, what is it you do in a nutshell? It's really, really hard to put everything into one sentence. But when it kind of comes down to it, DLP is a private financial services and real estate investment firm at its very foundation. We're so much more, which I'm excited to talk about, but that's really who we are at our base. So this is Don and his wonderful family. They also are here in St. Augustine, Florida, but originally from the Lehigh Valley, if anybody's familiar with that. Has a beautiful wife, Carla, and 3 boys, and all these amazing awards that he's won and has been nominated for over the years is a testament to how he leads our company. So what do? We invest in and we finance the building of thriving communities in many ways, and we transform lives. So what we're looking to do is make an impact. And what that means is, obviously, as you may or may not know, DLP stands for Dream, Live, Prosper. And our purpose is passionately making an extraordinary impact by transforming lives and building thriving communities. Our BHAG, if anybody's ever heard of a big, hairy, audacious goal, it's to positively impact and transform 10 million lives. So we're about 18% or so of the way there, but we're looking to provide housing to 1 million people and transform 10 million lives in a positive way. Our mission is to become the largest investor in rental housing communities and camps in the world. So big goals we have, but really it's all to make that impact, which I'm excited to talk about. We're an operator, so we own and manage real estate, mainly workforce multifamily housing, which I'll get into, but also single family rentals as well. We only lend on properties where we have extensive experience. So we're also lending to other real estate operators in a similar vein, because we know we can't do this ourselves. We can't do this in a silo. We need to partner up, and we need to work with amazing groups that are value aligned and that want to make that same impact in order for us to chip away at the 4 crises that we're trying to solve, which I'll touch on. We're vertically integrated, so all of these things you're seeing there, our funds, memberships, our acquisitions, everything there on the page is all done in-house. And so because we're a privately held company and we're vertically integrated, it helps us mitigate a lot of risk and really eliminate many variables that perhaps public companies or folks who aren't operators first can't. So I'll explain more as far as that's concerned. This is our flywheel. At the very heart of this is attracting the best people. We have the absolute best people in the marketplace working with DLP as team members. We have almost 700 team members today that are helping advance our mission. So those people then go and help you all in terms of our capital invested into our funds, which helps us finance and support real estate sponsors, building and developing and operating those communities, which in turn creates great returns for you, transforming and enriching lives, which then also turns back then into bringing more people into our community. So that flywheel is turning strong and continues to do so. We have some amazing core values here. The number one that we like to highlight here is stewardship. So we take it very seriously that what we've been entrusted, we need to do good while doing well. And so, we're taking that capital that you have worked very hard for over many, many years and putting that to good use in a consistent, in a conservative way that helps make that bigger impact. But Jordan, I think we'll have another call at some point to jump into the core values deeper because it's a lot of fun. I get really hyped up talking about them for sure. Some recent successes here. We were named by the Financial Times as among the America's, so all North South America, fastest growing companies in 2023. We were only one of 6 U.S. real estate companies to make the top 250. So big kudos to the team there. Wealthmanagement.com, our Building Communities Fund, which is one of our newer funds, I'll explain, was a finalist for new product development out of thousands of entries from more than 400 companies. So we're in great company there. As you can see, LPL, Mercer, Morgan Stanley, Fidelity, etc. So we are waiting on that to see if we've won. So, if you'll knock on some wood for us and cross your fingers, we'll be excited to hear how that goes. We've also been recognized as one of the fastest growing companies on what we call the First Coast here. If anybody's in Northeast Florida or nearby, would love to hear from you in the chat. We're not too far away. We might be neighbors. And that's been for the past 3 years of the Jacksonville Business Journal. Many, many other highlights, including being in the Inc. 5000's fastest growing company for now 11 years in a row. We're kind of breaking that surprise here tonight. So you get an inside peek, 11 years in a row, which is a running 3-year total. So it's okay, for a lot of groups that are smaller, they're growing maybe 60 or 100+% each year. A little easier when you're doing it for the first couple of years, but to sustain it, that's really what we're looking to do overall. We're very happy to say that we have investors in every single state and internationally as well, 2,500 investor families that we serve. And again, we do not take that lightly and being fierce stewards of your capital. Again, doing everything that we do within that spirit. And Florian, great to know that we have a neighbor here in Jacksonville. So thanks for saying that. Our Florida headquarters here, just off of 95, Florian, that's on the World Golf side. That's our Florida HQ. That's where I work every day with many of our other senior leaders. Our Pennsylvania headquarters in Allentown, Pennsylvania, where we first got started, and a couple of additional offices, including Orlando and Asheville, North Carolina, which I'm excited about. Here's our senior leadership team. We have decades upon decades upon decades of experience on this slide. Really amazing people, all really dedicated to furthering our mission. And the breadth of experience we have where, Don leads the ship, but we have some really incredible people executing and making things happen day in, day out. So here's what we think, right, as far as an investment thesis. We think that investments can be great or terrible based off of the price where you invest. So we're basis investors. If you get in at that right price and you underwrite conservatively and then you execute, you can scale that in a really exciting way, which I'll explain further. We believe that the Southeast and Texas are great places to invest. They're high growth areas, as you may know, population growth, job growth. And at the same time, affordability is awful across the board, but in those places as well. So we also believe that build to rent single family rental communities are here to stay and will continue to grow as part of our strategy. And really, again, one of the things that we talk about being impact investors that I'd like to highlight is when we're investing in our communities, more than half of the country today are paying more than 30% of their monthly income on rent. In some cases, up to 50 or 60%. That's not sustainable whatsoever. So we, as impact investors by mandate, our funds, we say that we're not charging any more than 30%. And actually, in reality, we're closer to 23% of an area's gross median income, which means you can afford where you live in a nice, safe, affordable place, which I'll show you a few of our communities shortly. And you can still live fully, one of our core values. You can still build a nest egg. You can still move to that next level of life while not having to worry about if you're going to be able to afford your rent next month. We know that people want flexibility. We know that traditional housing, people are buying homes later, and in some cases not at all. We believe also that the housing supply, of course, is going to continue to be restricted. We have waiting lists at every single one of our communities. We have, some, really prominent issues that we can see out there in the marketplace that we're trying to solve here in the 4 crises, which I'll talk about. And we also believe in the 20-mile march, which is another one of our core values, where when everybody else is running or afraid or hiding in their tents, to use that 20-mile march analogy, if you know that story, which we'll explain further too, you can still invest in those times. And in fact, in those times of volatility is typically where the most opportunity is. And we believe in investing with significant equity behind us, which is super important as well. Some highlights here as far as our funds. Our lending fund has been around since October of 2014 now, 9 years. Since inception, it's been a 12.71% net return to investors. All of our returns that we'll talk about tonight are net of any fees. So that's what you're getting every single month. There's an 8% preferred return, a target of 9 to 10%. And again, it's never been under 10%. The other cool thing, that preferred return that we'll talk about, that's always paid to you as an investor before DLP gets anything, even a management fee. So the idea is that, and again, I come from private banking, wealth management. A lot of those groups, they're getting paid regardless of if you're doing well or not doing so well. We put you as the investor first, always. We also have some interesting rebates. So if you invest more than $1 million into the DLP funds, you get a 0.5% rebate on that management fee, and 10 million or more is 1%. So really looking to help, offset that, even further and give you better yields for deepening your relationship with us. The lending fund has 90-day redemption, so you can get out with 90 days notice at any time. And in fact, it's never taken us any more than 60 days to redeem any one investor out. Very, very liquid fund, which I'll explain further. This is a private REIT, so it is a 1099 reportable investment, and you can take the 20% QBI deduction, qualified business income deduction, which helps offset tax even further. And of course, with all of our investments, we offer investing via qualified accounts, IRAs, et cetera, in different entities. Since inception, we've paid out $105 million of distributions to investors in just the lending fund alone. Huge milestone for us. You can see here that for the last year or so, it's been in between 10 and 11+%. The interest rates have helped the lending fund for sure, because we're charging a little bit more, but these are extremely bankable, extremely sophisticated and experienced investors. So we're not going dollar for dollar in terms of increasing the rate. Our number one priority always is never lose money for investors. And we've been very happy and grateful to say that that's the case. And we like to say that we're going to be able to say that in 5-10 years from now. So the yield is great. Again, the target is 9 to 10. It's never been under 10%. In terms of liquidity for investors, we have millions, tens of millions, frankly, of loans paying off every single month, which helps again with that liquidity, but then consistent, steady returns, which you can either take as distributions or you can reinvest and compound on a monthly basis. As I mentioned, it is a private REIT. These are first lien mortgage positions backed by real estate along with personal guarantees. Our loan to value today, so the amount of equity that borrowers are putting in to every single deal is substantial. And today, and on average, our loan to value at the portfolio level of almost $1 billion of loans under management is 52%. So extremely low, extremely conservative. And these are essentially really all non-owner occupied loans to full-time sponsored, meaning that it's all rental real estate helping to solve the affordable housing crisis. So we're not lending on first mortgages, people living in their primary residences. As I mentioned, 100% of the income is distributed monthly. You have that liquidity on an ongoing basis, extremely conservative structure, and that 1099 tax reporting is great too, not to mention the QBI deduction that we talked about. This is our Building Communities Fund. This is our ground up construction build to rent fund. We have an 8% preferred return on this fund as well. It's paid quarterly. So there is cash flow in the fund, which is great. The target net return here is 11 to 13%. Since inception, it's been at about 12.81. We know that the best is yet to come with this fund because it's relatively new. It opened in 2021, but seeded with a number of communities that are just now starting to rent up and lease up and getting to stabilization. So extremely good fund here. Our highest target rate of return here. Essentially you have that annual cadence of profit split as well, based off of updated value and sales of properties or refinances out of the fund. You can see here it's growing, of course. This one has about $80 million of investor capital compared to the lending fund that has about $450 million of investor capital. It's obviously always also been around a lot longer, but we expect this to be one of our flagship funds here for the next several years. And again, we can't build or buy fast enough to make that dent in the affordable housing crisis. By 2035, we need almost 5 million units of rental housing to make up for the demand. So lots of work to do there. We have a great pipeline. We have new communities all the time. So folks up in Pennsylvania, we have Dream Lehigh Valley, which is a great community we have built and now are leasing up, almost fully leased. Here in Florida, we have a community right across the street from our office, basically. It's going to be 55 plus 300 units close by to the office here, affordable multifamily housing. Dream Kissimmee, which is about 10 minutes away from Disney World. As I mentioned, we have such a demand, of course, especially in places like that. So that's leasing up. And then Dream Space Coast, which is a really neat property in Titusville, Florida. That's actually right across the water from Cape Canaveral. So you can see the launches from your backyard, basically. So really, really interesting communities. But these are all equity investments with substantial equity. DLP and Don, aside from and behind the fund investment, are always putting in a minimum of 5% of equity into every single deal as well. But in some cases, it's closer to 15 or 20%. So a lot of skin in the game by DLP ourselves. And again, significant growth potential there. Our DLP housing fund is going to be the fund where we are on the equity side still, like Building Communities, except we're buying existing communities that need renovation, that have been poorly managed, that need a lot of help. And so this is a really phenomenal fund. It's been around since just before 2020, but it was seeded with a fund and portfolio from 2017 called our Preferred Returns Equity Fund. So some really great, call it mature communities in the fund, where you're kicking off some great cash flow to pay that 6% preferred return. But the total target net return to investors is 10 to 12%. Since inception, though, and this includes a couple of large return years, in 2021, we had a 46% net return to investors because we had some really profitable sales that we purchased right in the volatility of COVID, which helped us then create great returns, but then also, again, make that impact on the affordable housing space. So you're looking at a monthly preferred return of that 6%, as I mentioned, and then annually, we update the value of portfolio of loans. Today, we have about $2.2 billion worth of real estate in this fund alone, 15,000 units in this fund alone. That's helping drive those returns. And so every year, you're expecting about a 10 to 12% net return to investors. Although with this fund as well, it is a private REIT. And on an annual basis, we've found that this is the most tax advantageous fund as well. So when you're looking at the distributions you've earned, you're actually essentially almost paying zero income tax on the federal level from those distributions, because we're able to pass through things like depreciation and we'll 1031 exchange, tax defer from one property to the next as we buy and sell. So extremely tax advantageous fund here. And you can see where we're investing, mainly the Sun Belt, but moving up into the Midwest a little bit as well. Our two biggest states today are Florida and Texas, but as you can see, all throughout the Southeast. The housing fund and the Building Communities fund have an annual redemption. So even though it's an equity fund, you're not locked in for 3, 5, or 7 years. And because of the fact that we're doing that annual cadence of the net asset value adjustment based on the portfolio value, and we're passing through profits from sales every year. You can be in for 1 year, 3 years, 5 years, 10 years, forever. These are all evergreen funds. They're all open-ended, meant to be open in perpetuity. So you can essentially create and protect and pass along this legacy based off of your timeline. All right. And again, these are all things that we mentioned already. And again, that significant tax benefits. I want to reiterate that because that's certainly something where, especially high income earners, obviously nobody wants to pay more tax than they have to, but to be able to get great returns with some liquidity within a very solid foundation of strategy, the tax benefits are an added bonus for sure. So the last fund that we have here is our preferred credit fund. And so this is going to be on the lending side again, where the lending fund is doing first lien mortgage positions only. This has a little bit more flexibility for our best borrowers. So they're putting significant equity in still. In some cases, we're able to do things like mezzanine debt or short-term second lien financing to give more flexibility for our best borrowers, as I mentioned. So this has a 9% preferred return. It's a 10 to 11% net return target. And since inception, it's been just over 10.5% net returns to investors. Every distribution in this fund is paid every single month. So both that preferred return and the profit split, 80% to you, 20% to DLP across all funds, that's the same. That's paid every single month in this fund, which you can take as a payment or reinvest. In this fund, you can also get out with 90 days notice. Again, it's never taken us longer than 60. And this does, because it's a private REIT as well, kicks off at 1099, and you get that qualified business income deduction, and it avoids any kind of UBIT or unrelated business income tax if you're investing via some kind of an entity or a qualified account. So significant benefits by having that REIT election. Really doesn't do anything else other than give you those added benefits and protections. Again, these are all evergreen funds, open-ended. We plan to keep these open in perpetuity. The share price is always $1,000, and we take that value or the criteria of each fund into account by adding shares at $1,000 per share. So, you're getting that benefit of growth as you like, but you're not increasing the share price. So. All right. Jumping here forward to the preferred, to kind of our fixed notes. This is our last offering that I'll talk about before we open it up for questions. Is a fixed return. So all of the funds that we mentioned, you own shares of the fund. With our fixed note, you're actually in a preferred position to all of our equity shareholders. So for instance, in the lending fund, if we're doing a note within the lending fund, every single equity investor, that $450 million, would have to lose every single penny of their capital in order for note holders to be affected. So it's an extremely low risk structure, completely fixed return. You know exactly how much you're going to make. So if you invest $100,000 today at 9% for 3 years, you know exactly where you're going to end up after that 3-year time period. And you can see that right here in this model. So we offer 2 note offerings today. There's an open-ended note with 30-day redemption. So if you're saying, okay, well, I need to park some money for a little while. I don't really need it necessarily, but I want to be able to get it quickly if I do. You can choose that 30-day model where at any time you can say, hey, I'm taking my capital back, and we can redeem it back to you within 30 days. So that's typically between 5 and 6% that you'll see, which I had shown up here. And then the 3-year term, regardless of the amount that you choose, you're going to get 9%. So you can see here that on a $500,000 investment, you're getting to about $650,000 after year 3, which is awesome. Shannon, our director of marketing, is here on the call as well with us, and does all these amazing things with our illustrations and things like that. So you can see exactly how you end up after a couple of years here in terms of the 5-year period. All right, this is our funds comparison. We'll make all of this available to you, as well as our fund portal. So you can get in and see all of our fund documentation. You can see everything from that perspective. I'm going to go a little bit quickly here through the market outlook, but basically the long story short is rents are continuing to rise. In June, the average rent was $1,726 per month. So you're looking at, essentially people looking for more housing. Renewal rates are up, and essentially, again, the Sun Belt especially is experiencing some extremely high growth. And again, the national average of rent to income is reaching 30% for the first time in more than 20 years. So it's not getting any better. Home sales on the flip side are going down substantially. Owning a home is almost $1,200 more expensive today than renting a professionally managed apartment, which is interesting. Occupancy is holding steady. It's down from the 2021 peak a little bit, but we're seeing a substantial need for folks that have been in more expensive housing that need to move into the kinds of communities that we own and manage that are safe, affordable, close to work. The average income that a resident has, we have almost 90,000 residents that live in our communities that we serve, is about $75,000 annual income. So it's workforce housing. This is not government subsidized. It is workforce, truly housing, nurses. We have police officers, firefighters, teachers, and their families living in our communities that we serve. New development, this is just a quick slide on, again, as I mentioned, we can't build or buy fast enough to make a dent in this issue. We need almost 5 million apartment units to keep up with the demand by 2035, which is just wild. Again, I'm going very quickly through all of this, but I'll be very happy to share this information with you after our call. But again, all of these things are pointing to the fact that there's a housing crisis, an affordable housing crisis in this country, and DLP Capital is set up to help solve that through our own offerings as well as with our partnerships with others. Again, the low supply of housing is just increasing the need for what we do. And so we do a little bit of we have what I think Warren Buffett calls it the core of competence. We do a couple of things extremely well in a humbly confident way, we like to say, right? We do a few things extremely well, and we do a whole heck of a lot of it in a very conservative way. And then it comes down to execution. So there's this missing middle section of housing that's going to continue to create that need for working families. And that's what we're exactly looking to do. And on the lending side, with a lot of lenders sidelined, or a couple of lenders that had one or two large, maybe hedge fund backers that have since moved on, or they're chasing on another shiny object or something like that. There's a lot of folks on the sidelines today that can't lend or are just frankly no longer in business. So what we're doing is we're looking to help continue to make that impact through our structure, which is built to be around for many, many years from today. As I mentioned, we have about 2,500 investor families we get to serve. We have over 5 billion of assets under management. We own over 40,000 rental units in those 20 plus states. And it's all to make that bigger impact. Again, all of our funds are evergreen, open-ended, above market returns, paying that preferred return first to you as the investor, par for the course for us. We deliver consistent results even in volatile times. In the 2008 crisis, for instance, that's when we, in Pennsylvania, New Jersey mainly, we bought upwards of 3,500 single-family homes for rental. And again, providing safe, affordable housing to folks that need that service, but can't afford to or don't want to pay more than 30% of their income in order to do it. So that was kind of our first go around in terms of a major crisis. This one that we're coming into, or the recession that some argue we're already in, we don't expect it to be as bad, but it's different today, and there are different challenges. So no matter what those times are, and again, we'll talk a little bit more about that 20-mile march, where if you go consistently, massive action day in, day out, with the right strategy and with the right execution, and doing things for the right reasons, most importantly, with that value alignment, you can do almost anything as you mitigate risk. Another exciting thing is that more than 70% of all the capital we raise, and last year we raised about $490 million. We're on track to raise about $500 million of investor capital this year to help drive our strategies and make that impact. More than 2/3 of all the capital we raise comes from existing investors making additions to their accounts. So we don't take that lightly. Obviously, we're extremely grateful for our investor family. They're wonderful, a wonderful community, and we're excited to have the opportunity to work with you as well. We have some, and again, we talk about the funds. Those are a conduit to the bigger picture. So again, what we're trying to do is we're trying to help folks create, protect, and then realize the legacy that you have. And so what we like to do every couple of months, and what we have coming up here shortly in November, is our Family Wealth and Legacy event at Sawgrass in Northeast Florida, Ponte Vedra Beach, just a little bit east of Jacksonville, where we're going to talk about that legacy and that more than money. So I'm going to play this this quick video here, and just let me know if you can't hear it. And now that I'm thinking about it, there may not be sound in the first place, so you may not you may not hear it because there is no sound. So, but really, again, all of this is to embrace that legacy, making connections with each other, thinking about that success to significance more than money. What does legacy actually mean to you? What are you trying to accomplish with the wealth that you've created? How are you looking to make that bigger impact within your circle and your family? So again, this is a huge thing for us. Sorry about that. Let me get out of this. All right. So if you wanted to register today, you can get into dlpcapital.com/events, or you can click on that QR code. What we've been doing is, if you invest, the minimum to get into our funds, $200,000 from now through November 1st, you'll get 2 complimentary tickets to this event, where the only thing that you'd have to take care of is the lodging, which we of course get a special rate on because of the event that we're holding. So November 8th through the 12th, would love to see you there, so that you can see exactly what we're trying to do with the capital that you've entrusted us. Some amazing speakers. Obviously, Don will be there. Jolene Godfrey, Michael Cole of R360, Lloyd Reeb of, if anybody's read Bob Buford's Halftime, Lloyd was a co-author on that. So that's where that success to significance piece comes in. Trav Bell, the bucket list guy, created the bucket list, and a number of other amazing speakers, with, I think, maybe the most exciting thing we look forward to is Oz Perlman, the mentalist, entertaining us on Saturday night. So it might be Friday night, Shannon, you can correct me, but some really incredible speakers, incredible human beings that help bring more context to what it is we're looking to accomplish here. In addition to that, during that event on November 11th, we're hosting an investor day. And so this is going to be a deeper dive into each of the funds, into the performance. You get to meet all of the team members that are driving each strategy. And in some cases, there's going to be some really cool things. I won't, maybe blow up the spot too much, but where we're actually going to be able to see, both in person and in a virtual way, our communities across our portfolio. So it's going to be a really exciting thing for us. We're very happy to be putting this on, and it's all part of our family wealth and legacy event. In addition to that, we do have regular investor dinners, and this is across the country. So whenever we're in a certain area, love to know where you're at. Love to invite you to a smaller get-together that we typically have when we're in your area. But typically we'll have some investor dinners where you can actually come and meet existing investors who may have been with us for a very, very long time, other folks who are considering investing. We can say that we are awesome all day long, but if you don't get to hear and understand the real life impact that other investors have seen, or the things that they've gone through, and the relationship that we have, that's more impactful than anything that I or Don or any of us can say. So that's really the heart of why we get everybody together. And on top of that, our operators, the folks we lend to, are also there. So we're extremely transparent, extremely communicative. There's nothing that we hide from anybody. We have, of course, audited financials by Cohn Resnick, one of the top CPA firms in the country. But really, it's all about, hey, this is who we are. This is the impact that we're trying to make. And it's all on the table. It takes away a lot of boundaries that way, we think. We're also doing quite a number of webinars, including, similar to the call that Jordan was kind enough to have us on tonight, on September 7th at 7, Thursday the 14th at 6. We're doing deep dives into our funds, market updates, Q&A, and you can still get to that at our dlpcapital.com/events link as well, which we'll make sure we have there for you. You can schedule a one-on-one with myself and my team. We're at the ready to talk with you. We like to joke, and I didn't talk with Jordan about this before, but we don't say, hey, you're not allowed to leave unless you bring a check or something like that. We're not like that. This is all about information, all about education, as Jordan mentioned, and just making sure that you know all about us. And if it's a good decision to invest with us, then we would love to have that opportunity for sure. This is our awesome team that helps drive our strategy as well in terms of our investor relations group. Really incredible people, incredible professionals that are ready to take great care of you for sure. So with that said, Jordan, I think that's the last slide I have. Again, I kind of went through some of that rather quickly, but I did want to leave plenty of time for questions. So I'll open up the floor and happy to answer anything that might be out there.
So Larry,
Hey, Daniel.
when are you going to move to Maui to rebuild Maui?
To Hawaii?
Yeah.
Well,
Rental housing there yesterday.
absolutely. Yeah, I mean there's definitely a need, and it's obviously from a personal perspective, we're seeing the devastation out that way and supporting it in a number of different ways. We also have a foundation and not for profit. We're able to do a lot more in that regard. But yeah, I mean, in some cases, and I think the Pacific Northwest is another good example of this, where again, because we're basis investors, in some places right now, it's just really difficult to get in at a decent price. And so the high growth areas that we know extremely well in that Sunbelt area, we're definitely looking to expand there. But we've owned and managed in a number of different states as well, including Arizona, Utah, and elsewhere. So I wouldn't discard that thought by any means. We're just not there yet, and we're looking to support them, of course, in their crisis that they're in today.
Second question I have. Your minimum investment is $200,000. Some of these people that are getting into practice are indentured servants at this point in their lives. Wouldn't it be smart for 3 or 4 of them to get together, form an outside partnership, and have the partnership invest in your product?
Yeah, it's a great point, and we do have folks that have done that. One of the things, and again, I as a call it an added benefit of working with Jordan. We're actually going to reduce that minimum for all of our funds to 100,000. And so whether that's the note or whether that's any of our equity funds, you can invest as little as 100,000 to get into the funds. And again, we want to have a conversation with you anyway. So understanding what your scenario is, what you're looking to accomplish, we could very well find other solutions for you as well. So
I'm a regional dean of the medical school here. I deal with my students, and my students are approximately $400,000 in debt when they come out of school. Jordan, that's probably been your experience, isn't it?
Oh yeah, that's I was a little bit over that when I came out. Yeah, so certainly that's a factor. But yeah, no, Larry, I think this was really great, and I think you hit on a lot of important points. I think it's obvious, the quality of work you guys do, and you have such a strong mission, which is not just kind of like transfer investors' money into our pockets and kind of what happens. You have a very outward oriented mission, both in helping, just the communities that you're in, the investors you have, and everything. You said a couple of really important things that stuck out to me in terms of just how you guys vet deals, because I think that's always the question or the most important thing, when you're investing in a fund like this. You want to be able to trust the people who are evaluating and analyzing the deals and making those decisions, because they're doing so with your money. But the fact, and you just alluded to it again, that you're basis investors, and really the value you find is when you buy it, that I think is really important. And I think that having that as the foundation of what you do, because again, when interest rates were low, people really kind of got carried away, and that's where people got into trouble, because they weren't buying based on the price. They were buying a lot of times based on the interest rate and buying adjustable interest rates, and then when the rates went up, they were all of a sudden underwater, and that created a lot of problems. The other thing you alluded to was just how, despite the fact that rents are increasing, we've seen in a lot of places where renters are paying like you said, like 50-60% of their income towards rent, which is just not sustainable. And that's something I'm obviously on a much smaller scale as a local active investor primarily, but we've seen that here too, where a lot of other landlords and investors have just gotten into trouble because they've charged so much for rent, and then these people, you know, just haven't been able to pay it because the sort of stimulus we've seen into the economy hasn't maintained, and it's kind of contracted a bit. And so that's also an area that a lot of people get in trouble. And so obviously you guys are very thoughtful in how you do it. So I have another question, but I don't know, any comments on that? And then certainly if anyone else has any questions, feel free to type them into the chat.
For sure. Yeah, and look, I mean, that's, you know, when you know the why, and when you understand the why of what you're doing, the how becomes that next step. And so for us, yeah, I mean, it's very, very sad. I mean, you see a lot of groups, and look, it's their prerogative, right? It's capitalism, whatever you want to talk about, right? But they can go out and they can buy whatever Class A properties, luxury properties, and there's a market for that for sure. But even folks that are considered, you know, middle income or workforce, you know, folks that live in our communities, there might be a very similar asset, call it, or a very similar community across the street from one that we own. And what we never understood was, yeah, sure, the owners of that community may be making a ton of money for themselves and or their investors, which is great. But we don't think that business is a zero-sum game. Like, somebody else doesn't have to lose in order for us to win. Everybody can win. Investors can make money. DLP can make money. You know, our residents can, you know, can find a safe, affordable place to live and have a quality of life that they may not get elsewhere. You don't have to trade that off. And so that's huge for us. And again, we talk about our core values quite a bit, but you know, it's almost sad to say, but you know, there are a lot of groups out there that have them on their websites or whatever, or on their walls. They just don't live them. We absolutely live our core values. And again, that era of stewardship, of, you know, that humble confidence and servant leadership, you know, that drives everything that we do. And if we're making decisions in that voice of, well, first of all, we never are going to lose money ever for an investor. Otherwise, we wouldn't have taken in investor capital in the first place. So that's a very conservative view. Mm-hmm. And then on top of it, to make that bigger impact, absolutely, we're going to make decisions in a more conservative and a more prudent way. So that's exactly what we're looking to do for sure. And so, you know, when you get folks that are coming in and, you know, maybe I don't want to be too crass necessarily, but, you know, a lot of folks with half of a pulse could have made money in multifamily real estate in the last 4 or 5 years. Mm-hmm. Now that we're seeing volatility, it's the ones that are doing things, and we, again, in a humbly confident way, will say, you know, the way that we're aiming to do things and the way that we're aiming to execute with that err on mission, we believe that that's going to be more sustainable for the long term.
Absolutely.
Well, Jordan, I've got to congratulate you. You made a great selection as far as this particular REIT presentation. I've just got to remind this group that there are REITs and there are REITs, and you really have to do your research on the REITs before you think about investing in any of these. But this is particularly AAA rated firm. Jordan did a great job with inviting him.
Yeah, no, I've been certainly very impressed and learned a lot from just exactly things like this that they've put together. And then that sort of dovetails into, you know, my last question as we kind of wrap up. Larry, there's a lot of options for investors, and you went through a bunch of them, which was just a sampling.
Sure.
How do you kind of coach someone into choosing the right fund?
Absolutely. And yeah, and again, first of all, the idea is that, you know, we are educating and we're providing support so that you can make an educated decision. So, you know, I joke about, you know, locking the door behind everybody at an investor dinner where they can't leave, right? That's, you know, obviously in jest. But what we really are looking to do is we're not selling you anything. You know, we have options that go to a particular part of our strategy, and based off of a number of different factors that may make more sense for you to invest in one thing or the other, or, you know, diversify across DLP. And so, for instance, the need for cash flow or the lack thereof, or if you're looking for a longer term growth, that plays into it. If you're investing via a tax deferred or, you know, tax advantaged structure already, you know, maybe the tax advantages of the housing fund aren't as compelling, but, you know, the growth is still apples to apples, the best that we have. The need for liquidity. You know, if someone is, you know, we have many active investors that are also investing on our funds, and they say, okay, well, I know I might be doing a deal in the next 9 to 12 months. I'm going to invest in the preferred credit fund. I'm going to get great, you know, benefits. I'm going to get a nice return over that time frame. But I know that if a deal comes up, I can redeem that out with 90 days notice and use it for my purposes. So that's another consideration. And then certainly, you know, the ability to earn as much of a yield as possible. I mean, that's obviously important. So we all, when we were, you know, everyone on this slide here, our team, are walking through that with each individual that we come in contact with to say, hey, what is more important to you? What's kind of the thing that keeps you up at night? What are the things that are, you know, you're really trying to accomplish? And again, that's that bigger picture view we're taking, where it's not just, hey, you know, let's put your money to work. There's a lot of places out there like that. Absolutely. What we're trying to do is we're trying to use our vehicles as a conduit to help you get to that bigger picture, that success to significance that you're trying to achieve, build that legacy for your future generations as well. So we take that bigger picture view right from the start.
Awesome. And question from Anthony here says, what's the best way to discuss with someone in your company more about the details of this opportunity at a slower pace? A good
Yes,
question.
and Anthony, thank you for that. I think I'll be the first to admit that even though I've been here in the South for a number of years now, I didn't pick up on the slower pace of speech. So my Northeast, you know, my Northeast timbre is still there. So appreciate that. Yes, that's, you know, what I'm trying to do today is open the fire hose for everyone to see essentially everything that we have, which, you know, is compressed into a, you know, 40 minute time frame. Our team here, and you know, that QR code on the screen, or what I'll do is I'll put in invest@dlpcapital.com or our main phone number into the chat box, and we'll schedule an appointment with you, take it, you know, specifically for your particular scenario. We're going to probably ask you a bunch of questions. So it's, you know, not so much we're talking at you, so to speak. It's more, you know, hey, let's get to know each other. Let's understand what's important to you. And that can take as little or as long as you like, and as many conversations as you require. So we're not rushing anybody. We don't push anybody. We want to make sure that this ends up, if it is a great offering or an opportunity for you, you have everything that you could possibly need to make that decision.
Fantastic. Well, Larry, thank you so much for your time and for going over all this. Like I said, I learned a ton every time, and I'm sure we all did. So, and everyone, if you have any other questions, definitely you can reach out to Larry, and I'll send an email later with you CC'd to everyone as well, along with the recording. So thanks everyone for joining. Thank you, Larry, again.
Thank you, everybody. Thank you, Jordan. Have an awesome night.
Thank you, Jordan. Thank you, Larry.
See you, everybody. Thank you.